Another question along these lines is, are money markets safe? And we've got a lot of questions about that as the market fall has happened so quickly. It's pulled in other asset classes like even treasury bonds, and short-term, very high-quality investments like commercial paper. They've been pulled into this concern as the market has been looking to sell anything to get cash, and so high-quality treasuries, inflation-protected securities, um, commercial paper, even stores of value, even fear assets like gold. Last week, we saw everything was negative, and the reason was because sellers were trying to sell anything they could get their hands on to raise cash, and that brought up that selling. The ferocity of that selling brought some assets that we rarely talk about, such as commercial paper, into discussions of are these safe? Um, these assets are very short-term assets, usually less than 90 days in term, and they're generally high quality. The market did see, like we did in 2008, we did see some dislocations, and markets were not functioning properly. However, over the last several days, the Federal Reserve has come in and has provided a large degree of buying in these areas that we're seeing a shortage of buyers in. And we believe money market assets are safe. Bank deposits, banks are still very well capitalized. And with the amount of money that the Federal Reserve is offering in these areas, we feel like money market assets remain safe. There are some other assets like longer term bonds and higher term, higher yielding bonds, which have also been questioned in terms of their ability to repay. And the longer that this quarantine and the longer that the shutdown goes on, those assets will likely be much more likely affected than some of the money market assets. So I think it is, again, an issue of timing. The longer this goes on, probably some of the higher yielding and longer terming bonds are likely to be the ones that the market has the most question about. The shorter term and higher quality bonds, such as you would find in a money market, the Federal Reserve, I think, even if those do start to falter, as they did for a few days last week, the Federal Reserve is likely to provide probably more liquidity than the market probably needs there.